Hello, everyone. Welcome back to another episode of Wade into Wealth, episode 101. We blew right through 100.
Finally did it. I feel like we've been talking about it for months.
The interview with Megan Riley. We've had some great interviews lately with Megan Riley and Tippy Toes on franchising and her experience on Shark Tank, Karen Iglesia with Primetime 585, and Dr. Karen Gordon. But you and I are back to talk politics. And I thought we'd take this episode and we would share our own political views and talk about who we're voting for. Because if we've learned anything over the last couple of years as a country, we can converse without conflict when it comes to politics. What do you think?
That's about the response you're going to get from me when it comes to
Fair
that.
enough. Fair enough. Well, let's talk politics in the sense of the stock market, the economy, because it is something that on a regular basis, I know I hear about, and I'm going to assume you do too, from clients or people about how they anticipate one party or another party either being good or bad for the stock market and the economy.
All the time.
Yep.
And
how often is it based in data and evidence?
Not often.
How often is it based on personal feelings?
Very often.
Yeah. I mean, I would say almost 100% of the time.
Yes, I'd agree with that.
Yeah.
And if it's not, it's just shy.
Right.
Just shy of 100%.
It's really interesting, I think, when you look at what history has shown us about whether the Republicans or the Democrats have control of the White House or Congress. I think as an overarching theme, it doesn't matter nearly as much as people think it does.
No, and I credit a lot of that to the media because they make it out as, now, politics are important. This isn't to say that they're not important, but the weight, like on CNBC that we talk, well, if Republicans win, then this means this, and if Democrats win, then this means this. But in the long-term picture, no, it doesn't, whether it's Democrat, Republican, It often does not matter in the big picture of things. It's just the uncertainty that comes along with it in the lead up to and the build up to whatever the election period may be.
And we're in one of those periods right now.
We are. And historically, we've seen that especially with midterm election years, that the markets leading up to that October or November of that year tend to move sideways or negative.
Mm-hmm.
Why? Because of uncertainty. Because there, and sometimes can be change, or there's no change. But either way, the market doesn't know. And when it doesn't know, uncertainty always leads to volatility.
We've had one of those years this year.
We have.
I would say that I don't believe the midterm election that is coming up within the next couple of days is the real driver for the uncertainty this year.
No, it hasn't helped.
But it doesn't help.
Yeah.
But I mean, it does seem to be the case that an election breeds uncertainty. We saw it a couple of years ago in 2020. Mm-hmm. There is uncertainty leading up to an election. Markets like certainty. This year, certainly inflation, interest rates, war in Europe. But markets like certainty. So what have we seen as typically the trend as we get much closer to the election and thereafter?
Historically, and when we say, so we're talking about the past 60 to 70 years in analyzing the midterm election years.
Which it should be stated that past performance is no indicator of future returns.
Correct.
We'll throw that out there.
Yep.
But history can sometimes give us a clue into what has happened at various periods. And we have an election every year, midterm election every 2 years.
And we're only talking about averages.
Right.
When we look at this stuff, this is what has happened on average in these years or in these periods of time. And historically, we've seen that in the weeks leading up to the election day, we start to get a little bit of a bounce in markets. Mm-hmm. And so far this year, that really hasn't been any different because we're filming this on Halloween, October 31st. And October right now is on pace for the Dow Jones Industrial Average to have the best month that it's had in almost 50 years.
Ooh!
Yeah.
Did I scare you?
Yes,
Spooky?
you routinely scare me,
Yeah.
especially with that voice and those noises.
Happy Halloween.
And often what we've seen is that once we've gotten past that election period, that rally has tended to continue on average. Every time's different. And to your point, just because it happened in the past doesn't mean it will happen again. But we've seen it happen enough historically where sometimes you can use that form and basis of your behavior going forward.
And I wouldn't suggest that the return has been because one party has been victorious and the other hasn't, but that there has been a degree of uncertainty that is gone now. We know what the deal is.
Yeah.
We know who wins. And, this has happened in 2016 when Donald Trump won the election. The markets rose the next day.
Yep.
And we're not in a presidential election, but to give some context, the markets rose the next day. There was a degree of uncertainty that was removed. It was a big surprise, but the markets reacted favorably. And you can go back to when 2012, when President Obama was reelected. The markets reacted negatively for a day, but then very, very strongly positive. So it doesn't necessarily matter who is winning an election, but there's a degree of uncertainty that is removed.
Uncertainty always leads to volatility. And when we start to transition those pieces of uncertainty over to clarity, that's when we start to see some stabilization.
Mm-hmm.
And when we look at a year like this year, you have multiple pieces of uncertainty: interest rates, inflation, the war between Russia and Ukraine, midterm elections. The more of those we can start to check off and start to get more clarity on, we're more likely to see a positive result from markets. And so even if fortunately, we know midterm elections are coming up, they're happening soon. That's one piece. We're not going to have that uncertainty anymore. And markets will favor that.
Well, they will likely favor that, we should say.
Thank you. Yes.
They
We
will
have the
likely
potential
favor
for it. But we've already seen, kind of leading up to this point, a little bit more stabilization.
Yeah.
And why? Have we gotten positive inflation news? No, nothing's
not
changed on that
necessarily.
front. Federal Reserve hasn't really said too much on the interest rate side, and Russia and Ukraine are still in the middle of a war.
Right.
But we are getting closer to those midterm election results. So hopefully we can continue to see some more stabilization. Interestingly, though, is that since 1950, in the year following the midterm elections, the stock market has risen on average a little more than 15%.
Yeah, it's done significantly better in the year period following a midterm election than when there has not been a midterm election.
Correct.
Where it's about 7%. So more than double.
Right.
And I think a lot of the times that is just because there is a lot of uncertainty that is removed very quickly.
And some of it, because of that uncertainty, you have a year, again, we're only talking about historical averages, where you see the market move sideways to negative for a vast majority of that year. And then you get that clarity and we see a nice, or the potential for a nice bounce back.
Yeah. So one of the things that is interesting to me is, and that you'll hear very often is, well, do we have, and this is what's kind of up for grabs this year because there's 2 more years left on Joe Biden's term as president. So really what is up for grabs now is control of Congress, control of the House of Representatives, control of the Senate. Historically, in a midterm election, the party that has the presidency loses seats. That is historically what has happened. I don't know whether that's going to happen or not. But what I think is interesting is how have we seen the markets perform based on the makeup of the White House and the two parts of Congress. And so we have what's called a unified government. So this would be when the White House and both houses of Congress, both parts of Congress, House of Representatives and the Senate, are in control by the same party. So either all Republican, all Democratic. Right now we have a Democratic president, we have a Democratic Senate, and the Republicans control the House. Am I correct? I believe
I defer to you for that stuff.
Actually, I could be wrong there. Look. This shows you how much I really pay attention to politics. I honestly don't care.
I'm the same way.
But unified government, average return 10.5%.
Yep.
Okay. Unified Congress, but different party in the White House. So either House of Representatives and Senate, controlled by one party, the other party is the presidency. 7.5%. Split Congress. So you've got House of Representatives and the Senate, different parties have control. Almost 11%, 10.8% return. So what's most interesting to me, in no case here is there a negative average return.
Well, sure.
There's just a least good
Yeah.
situation.
Right.
But I found that to be very interesting that there is not nearly the amount of power over the stock market that people often believe there is based on which political party is in power or which political party is not in power.
Yes. It's very interesting.
Very well said. Thank you, sir. So to sum this up, elections matter. They matter for lots of reasons. And something that was really eye-opening to me, and we'll go back a ways here. When I was in high school, I shadowed the Genesee County Legislature, which was in high school. And so this is...
How about this?
Yeah.
Go. Yeah, I'm interested.
Okay.
Yeah. What else you got?
So what dawned on me was the impact on our everyday lives, the decisions that are made at the hyper-local levels have versus the decisions that are made at a national level.
Sure.
Something like this. I remember them talking about where are they going to add a stop sign at an intersection that had some fatalities at it. Okay, and when you think about it, you're like, that's actually something that's going to impact someone's daily life significantly more than a lot of things that are decided at the congressional level or at the national level. And there were all of these decisions about rules in your town or ordinances in a town that I was really taken by that. And it's always fascinated me the amount of an impact that we give to the national political scene when what's happening in our own towns, our own cities, our own counties is very often more likely to have a significant impact on our day-to-day lives.
I think the big point of this, elections matter.
Yeah.
They do matter. It's just when it comes to the stock market, we often think that the success or failure of the stock market resides with who sleeps at 1600 Pennsylvania Ave. And it's a lot more than that. And we have to remember that one party or one president isn't going to make or break what happens with the stock market as a whole. It's going to come down to what are the companies doing? Mm-hmm. Are they still selling products? Are they still selling the services? Do they still have money coming in? Are they still turning profits? Are they healthy? And if they are, they'll be okay.
Right. And here's the other thing. I don't know that I have any clients that we're investing with a 2 or 4 year goal.
No.
In most cases, it's not. All right, well, over the next 4 years, we need to accomplish this. In almost all cases, that period is 10 years or longer that we're looking to achieve an objective.
Yeah.
And so the length of one term does not matter nearly as much from an economic and from a stock market perspective as is often given.
Mm-hmm.
You want to have your thoughts on who the best candidate is? Great. We're all entitled. We all get one vote.
That's right.
That's great. But when it comes to the stock market, it doesn't matter nearly as much as people give it credit for. And so keep that in mind as you head out to the polls this year.
Yep. Get out and vote. Keep your money invested.
That's right. Well, that's where to wrap it. It's Halloween, so I wish you a spooky Halloween, although Halloween will have passed by the time this is airing. Our children should be coming down off their sugar rushes. And so I wish you the best tonight.
Thank you. It is one of my least favorite holidays.
Okay, well, that's just because you are one of the biggest Grinches I know. We'll leave it there and return next week with Wade into Wealth.